sanctuary if you're ready tonight. I know that it's all so heavy. Won't you let me inside? 'Cause I could be your sanctuary.
What's up, guys? Hope everyone is doing well. In this video, I'm just going to be slowly going over Bitcoin, two different charts, but to go ahead and get it started here, for this first chart, this 2-weekly chart, as I've gone over in the past, these three support / resistance ranges, we see our ascending red support, which is approximately 6.5 year, not 6.5, just approximately 6 year long support going all the way back to July of 2017. You can see support, support, and then support right here. Each of these bounces within this ascending support has led to basically a bull market. Obviously, this was kind of right here in 2018 and 2019. This is more so a relief, and then we had this kind of obviously a drastic drop right here. But overall, it was basically the beginning of the bull market. And then we go to our right here, our horizontal support, which lines up with the previous cycle's all-time high from approximately 20,000. Lastly, we have our descending what was resistance starting at the double top when we hit 68, or just approximately 69,000. Obviously, we had our bear market leading down to approximately 15.5 thousand. We then had our breakout of that. Overall, in the grand scheme of things, what we did break out of is a falling wedge or falling triangle pattern, a bullish pattern. You can also look at it, as I've pointed out many times, basically just a macro bull flag of a falling triangle or falling wedge variation, instead of, kind of seeing like it more of a symmetrical. That's not necessarily symmetrical what I just drew, but this would kind of be like a megaphone pattern. Sometimes you'll see this megaphone, sometimes you'll see a symmetrical formation. You could even, there's plenty of types of ways you could see it at the end of the day. But outside of that, each of these black ellipses on here, as I've clearly denoted down here, kind of as acting as a key or a legend, I suppose. As most of you know, those of you familiar with my content, I've been expecting, whenever the bear market low, the absolute low, finally set in, I've been expecting to see the bullish behavior going into the next bull market for Bitcoin and the cryptocurrency space, broadly speaking, to be very, very similar in terms of price movements from March of 2020 to, at least in general, just double top we set. So far, and just to reiterate real quickly, right here, right here, right here, and right here, each of those that I highlighted have been the four main areas, currently being on the fourth, where I thought that there was at least good potential that the next bull market could have started. Although now I think it clearly seems like we are definitely heading into that, given this most recent relief towards the upside. The fact that from highs down to lows, we are down 77%. The previous bear market was, from top to bottom, was around 83%. As I said, I think I said it earlier, but obviously the phases and the cycles are lengthening, they're taking longer to progress, and also during that, the bear markets are becoming less severe. The percent towards the downside is lessening over time, and the bull market thrusts toward the upside are becoming less bullish. They're not gaining as much percentage movement towards the upside. So 83%, 77%, 6% difference. I think that that's definitely met that criteria. And then the fact that they've gotten this 100% move, this relief towards the upside, breaking out of this, like I said, that macro falling wedge or falling triangle pattern, having this kind of very nice, elegant trifecta of supports, all finding confluence at the bottom we've set so far. To me, this really seems uncanny. I mean, I don't really know what else you could ask for. I mean, there's plenty of people in this space that are kind of predicting moves to like this, where it's continue to go down like for so much longer, hitting like 10, even like wicking down the 9,000. I mean, I have entertained that on this channel because at the end of the day, anything's possible. And as a trader, you really need to prepare yourself for anything, and that's definitely a possibility, even though the percentage likelihood for that's like very, very low. It isn't really, it's not really rational and realistic at the end of the day either. I mean, if you're expecting Bitcoin to drop another at most 63%, I mean, if you want Bitcoin blockchain technology in general to prosper, why would you want it to go down that low? It would completely destroy the just the overall the elegance of Bitcoin's phase cycle systems. I mean, it would completely, I mean, we didn't really eat into the last cycle's high. I mean, we basically, as you can see right here, with this wick, we literally wicked down to nearly the exact top of the closing of this candle on December 18th. I mean, we really didn't dig into the previous cycle. The only thing we touched of the previous cycle, according to this 2-week chart, was the wicks. I mean, that's a fantastic retest if you ask me. And like I said, I don't really think it's digging into the previous cycle. If we go down to 9-10,000, then we would really be digging within the next cycle. And to me, that just puts a dampening effect into it. I feel like a lot of people will just kind of lose a lot of trust in it. I mean, overall, if we actually were to go down, if we went down to 11.6 thousand, that would be 83%, the exact same drop as the previous bear market. As I just got done saying, bear markets are decreasing in severity towards the downside over time. So it's technically logical. Realistically, that can't happen if you think about it. I mean, obviously, it has potential, but I mean, it's just not, like I said, realistic or rational by any means. Yeah, like especially if we go down to 10 to 9,000, that's 85, 86, 87%, which is more than the previous bear market. And just, again, like it just doesn't make any sense. I mean, I really just don't get why many people are like, at that point, you really just have to be emotionally invested in that price target, and which is a bad thing because it's not coming from genuine reason or logic. It's because this person emotionally wants it to go down to that price. Maybe because they missed out buying it that low and they're just kind of like mad, or I don't know. I mean, emotionally invested in it is just obviously not a good thing. Anyways, to continue on here, again, I just want to fixate our attention back down here. Just looking at these fractal patterns, obviously this one's December 22, 2023 of June, our current one, and then March 2020, September 2020. Clearly, all of you can see how nearly identical these are. It's this bullish buildup, which further validates the likelihood that we will then move up similar at the very least. Now, I'm not saying it's going to be precisely like the fractal pattern that I have on here carrying out the projection, but I think it's at least will be rather similar, carrying us towards around $210,000 to $230,000 approximately by hitting the first top literally very in more like second half of December maybe, or just in general December, but more fixating this high, this next upcoming top range, basically first half of next year. Outside of that, I just wanted to quickly show each of these. So we're within cycle 3 of Bitcoin. We are within phase 1. We are in the latter half, the second half of phase 1, which would be commonly known as the super cycle. According to the way I view things, I would more properly label it as super phase, but the first one of the first cycle occurred September 2010 to, as I see here, February 2011. You see this kind of this ABCD type pattern, this kind of lightning bolt, this bullish lightning bolt, bullish ABCD-esque pattern. We go to November 2012, November 2013. This is the one that people were typically talking about when they were referring to a super cycle or a super phase. Again, we can see this kind of bullish ABC, bullish lightning bolt pattern. These first two are obviously clearly similar. And then we go to our third cycle, which is the one right here. And obviously I have it carried out. That's assuming I'm accurate. Which at the end of the day, who knows if I'm going to be accurate or not. Although the fact that this bullish buildup looks as much as it does, hopefully, you know, best case scenario, hopefully, you know, I would be right. Which, I mean, it would be not only good for my investments, but good for everybody else's investments as well, which is obviously not a bad thing. But overall, you can still just see this kind of 3-point move, this bullish lightning bolt pattern. From the ratio from this first one to the second one was about a double in the temporal, the length of the phase, whereas from 2 So the second one to this third one, the ratio was about 3.3 to about 3.5. So it's not the same ratio. Personally, I know it's not really something I've talked about it in the past with respect to my theory on the overall harmonic movement of Bitcoin over its period of time, but it's not really a big factor. Overall, it's clearly, if you go back and watch those videos I mentioned earlier, 2 cards at the beginning of this video, clearly pointing out the fractal repetition of phases, of cycles, of the phases within those cycles of Bitcoin over its time. If we look down here at the RSI, we can see each of these areas where we get highly oversold down here in 2018, 2019. So we had a short period right here for the March 2020, and then obviously our bottom range we currently set from around June of 2022 to November, December of 2022. You can see each of these times we had right here printed. We see pink vector candles, pink vector candle, and then pink vector candles. You can clearly also see those are also printed each time we lose the 50 estimated moving average band. That's the turquoise moving average, or estimated moving average that you see within that pretty obvious purple band. Even if I go all the way back here, we see the same thing happened right here as well. Highly oversold on the RSI. You see we've entered our the lower half of the neutral range. You can also see the similarities in the buildup on the RSI as with the price I mentioned. You kind of see this kind of 2-step move towards the upside. Again, very, very uncanny in my personal opinion. You can also see that we just recently on this MACD, again, this 2-weekly chart, so a very valuable chart. Just recently, May 8th, the 2-week period of starting beginning at the May 8th, we had the crossover. This bullish crossover, last time we got that was, well, I guess it would be June and July 2020, which is what lined up with this area right here on price, about halfway through this build-up period I've been mentioning. So now at this point, we're really just waiting to see this MACD continue just and then have a massive release of momentum towards the upside. Obviously, similar to how we did back here during the previous bull run. If we look down here at the volume-based indicator, we can see how we came down, we made our low. We saw the bullish deviation starting from the first low around June of 2022 to that, again, December-November low around 50.5 thousand, which at this point is the most likely, the absolute bottom of this bear market. We see had that build up. Now we are above the 0 point. We've converged toward it. We have broken above it. We are finding solid ground above that as well. Also on here, I can again just point out how we see kind of we go up, we go down, we go up, we go down, then we go back up. And if I do the same thing here, we went up, broke above the 0 point like we did previously, come down, went up, now we're coming down again. And then we would then, you know, eventually continue to break towards the upside overall for that. Because I'm just now remembering it, there is actually something else I'm going to go over real quickly. I forget which chart it is on. So this chart, this is a monthly chart, so even better than the 2-weekly chart. I just wanted to also point out this the closing of the May candle opened, it closed above the point, or the 1.618 of the macro Fibonacci retracement from the top of the first cycle, $30 approximately, to the pretty much $0. You can see that is also very big as well. The fact that we are now solidly above the 1.618 of that, obviously very macro retracement. You can see right now that the candle, the body of the candle is insanely small. I don't even know. Let's see if I zoom in, I can actually even begin to see the color of it. Yeah, there we go. We can just barely see after I zoom in a lot that it's green. So let's say that for the rest of this month, we continue to see, like, we get even larger wicks on this candle, but the body stays really, really small. Again, just to point it out with the high rule, because these are the Heikin-Ashi candles. Last time, let's say we just go back to something similar to that. The last time we saw something similar would be right here, March of 2019. So this area right here. Once we saw that, we then saw basically the overall beginning of this macro bull market that we saw. Also, the main thing that I wanted to point out was I've been going over this indicator right here, the volume price average range indicator, another volume-based indicator. If I zoom out here, and just again kind of reiterate where these are lining up, each of these red dots you see here on this indicator line up with each of these vertical lines I have on here, clearly lining up with each of the bull markets, the brunts of those bull markets. And I had been saying that we really kind of needed to more solidly come down and retrace a little bit more to about halfway the length of from the top, from this blue line to this pink line. You can see each time if we go back to each of these bubbles, that's essentially what it did every single time. We have now officially met that criteria, so that is fantastic to see as well. Again, just further affirming the fact that we are very likely about to enter in a bull run. Again, probably if I just had to make some sort of guess, likely something similar to what, again, I showed on here. But the last thing that I wanted to touch on is this daily chart I've been going over recently. So either we will take this black path or this white path, whether or not we get this further drop to no lower than around 22.7 to 24.5 thousand. Or if I zoom in here, we end up finding support within this yellow trend line range right here, and we take this white path towards the upside. If we look here at this RSI, what I see, you can see these kind of this resistance line that we embattled right here. Once we finally broke above it right here, we then had this move right here. We had another kind of resistance right here that we finally broke recently. So if we get something similar to this, if we're kind of just having a minor retracement consolidation before we get another move, according to the way this RSI patterning is working, let's say we move, so it's 58% to around, so 48% to 58% if it's something similar to that. So from the low, if we move up 48%, that takes us to the golden pocket range, this upper one that I've been talking about recently. So basically 38,000 all the way to 41,000, which would, if we end up hitting that around July, first week of July, would line up with, again, coming up and bumping this resistance we've been seeing ever since January of this year, when we broke out of this macro curve linear falling wedge, falling triangle pattern that I have on here. The red dotted line again being the linear resistance we were facing. We came out, we turned it into the support of this this bullish megaphone pattern I have drawn right here. But that was really all that I wanted to touch on in this video. Once more, is to quickly say it. Either we will get another about 10-15% drop down around 22.7 to 24.5, or we will kind of just trend sideways a little bit more and then start to move up, leading into around the first week or two of July, and then hit our next local top. Although whether or not we go down for a little bit longer or not, basically we are kind of at the final pit stop according to my projections before we finally see the massive ramp up, the massive move towards the upside, hitting, like I said, in general around 200 to 250,000, likely around 210,000 to 230,000 around very end of this year, first half of next year. But all of that being gone over, hopefully you guys enjoyed the content. Again, check out those videos that I mentioned. This card is linked if you haven't already seen that. If you're new to the content, hopefully you took away something from this in an educational sense. Again, this is not financial advice. Please, by any means, do not make a decision based upon anything I've gone over in this video. Do your own research, look into a bunch of other people's opinions, come to your own conclusion, and make your decisions based upon your reasoning and not mine. All that being said, I hope you all enjoyed, and I hope you all have a blessed day.